You ever think about, like, how much influence one person can have, like, over how companies are run? It's kind of mind-blowing when you think about someone like Larry Fink.
Oh, absolutely, yeah. Head of BlackRock. Talk about influence.
That's the guy. I mean, we're talking about the biggest asset manager in the
Right.
world, right?
Yeah.
Trillions of dollars.
Trillions, yeah.
And they've got a stake in, like, practically every major company that's publicly traded.
It's pretty wild when you think about the scale of it.
Yeah, it's not just some small percentage either. BlackRock owns, like, at least 5% of most big companies.
Yeah. Gives them some serious voting power.
So, like, what does that even mean? What kind of impact does that have on those companies?
Well, that's where things get really interesting.
Okay.
Because Fink, he's not just about squeezing every last penny of profit out of those companies.
Oh, okay.
He's got this whole philosophy about companies having a social purpose. Like, he thinks they should be thinking about environmental sustainability and the interests of, like, all their stakeholders,
Right.
not just the shareholder.
So it's not just about the bottom line.
Exactly. He's actually said, and I quote this, profits are paramount to everything a company does.
Okay. Yeah, I mean,
But to remain in front of change, he continues, to be part of a growth environment, I believe involvement in a community, to have a purpose, is vital for long-term survivability and long-term profitability.
okay, yeah.
So he really believes that.
I mean, that's pretty big coming from someone who's, like, running this huge financial institution.
Uh-huh.
So how did BlackRock get so massive in the first place?
Well, a lot of it comes down to this trend of passive investing. Specifically, these things called index funds and ETFs.
Yeah.
Have you heard of those?
I've heard of ETFs, yeah.
So basically, instead of picking individual stocks, these funds just try to match a certain market index, like the S&P 500.
Okay, so they're not, like, actively trying to beat the market?
Right, they're just trying to mirror it.
Okay.
It's a very different approach.
But how do they, like, actually, what do they, like, what's in them?
It's a good question. Imagine it like a basket of stocks,
Oh, yeah.
all representing a specific theme or industry. So say you're interested in renewable energy, right?
Okay, yeah.
You could buy individual stocks in like solar panel companies or wind turbine manufacturers.
Yeah.
But that takes a lot of research.
Uh-huh.
Instead, you could buy an ETF that holds shares in a whole bunch of different companies in that sector,
Oh, I see.
all in one package.
Like a one-stop shop for investing.
Yeah, that's a great way to put it. And because these funds aren't actively managed, they tend to have much lower fees than like the traditional mutual funds.
Okay, yeah, fees are a big deal.
Big deal. So that makes them very appealing to a lot of investors.
Okay, so BlackRock manages a lot of these ETFs.
A lot of them.
And because they hold big chunks of so many different companies, it gives them a lot of say in how those companies are run.
Exactly. But there's a bit of a, well, almost a contradiction here.
Oh, what's that?
If most of BlackRock's investments are in these passive funds,
Yeah.
how can they also be what Fink calls an active owner, like actually pushing for change within the companies they invest in?
Yeah, that seems like two different things.
Right. It's definitely a point of contention, and Fink has been trying to address this head on.
Okay.
He sees BlackRock as playing this, like, active stewardship role.
So they're not just, like, sitting back and collecting dividends.
No. They're using their voting power to advocate for changes within companies.
Oh, wow.
Even if those holdings are part of a passive fund.
Okay, so they are trying to shape things.
Absolutely. They're putting their money where their mouth is, too.
How so?
They've almost doubled the size of their corporate stewardship team. So they've got a lot more people dedicated to this whole idea of engaging with the companies they invest in.
I bet that doesn't make everyone happy, right?
Yeah.
What are some of the criticisms that Fink has faced?
You're right. There's been some pushback. One of the big concerns is that these passive funds, especially the ones run by giants like BlackRock, are getting too much power.
Yeah, I can see that.
Like they could be steering the market in a way that no one really intended, and that could have all sorts of unintended consequences.
A lot of power concentrated in one place.
Uh-huh. And then there's the whole issue of conflicts of interest.
Hmm.
BlackRock has their hands in a lot of different businesses, and some people worry that those lines could get blurred. Like, are they always putting their clients' interests first?
Yeah, I see where they're coming from.
Right. And there have been some pretty vocal critics.
Oh, yeah.
You might have heard of Sam Zell.
Yeah, the real estate guy.
Yeah. He actually said, and I quote, "I didn't know Larry Fink has been made God."
Wow, he really went there.
Yeah, it was a pretty pointed remark about Fink's influence.
So one of the big things Fink's been talking about is sustainable investing. What is that exactly, and how does he think it's going to change finance?
Well, basically, it's all about making sure your investments are also, good for the environment.
Yep.
And Fink really believes this is the future of finance. And BlackRock is actually putting their money where their mouth is.
Yeah.
They've completely divested from thermal coal, for example,
Wow, okay.
and they're pouring a ton of money into sustainable energy sources.
So he's, like, really putting a lot of faith in this whole transition to a green economy.
He is. He's all in. And it's not just him. This whole ESG investing movement is really gaining momentum.
ESG.
Environmental, social, and governance.
Oh,
It's like this new way of thinking about investing. People are starting to consider these factors alongside just, how much money they can make.
So how is this actually playing out in different industries?
Well, some industries are definitely feeling the heat more than others.
Like who?
Take fossil fuels, for example.
Mm.
Companies in that sector are facing a lot of pressure to clean up their act.
Okay.
And BlackRock is a big part of that.
Can you give us, like, a specific example of how they're doing that?
Absolutely. Look at ExxonMobil.
Yeah, big oil.
BlackRock was really instrumental in pushing for some major changes there.
What kind of changes?
Well, for one, they've committed to reducing the amount of natural gas they flare off,
Okay.
and they're being a lot more transparent about the risks they face from climate change.
Mm.
And that was the direct result of BlackRock using their influence to push for those changes.
Wow, so they're not just talking the talk, they're walking the walk.
Exactly. But here's a question. How do they actually make these changes happen?
Yeah, good question. If most of their holdings are in these passive funds, how do they actually, like, influence these companies?
It's a good point. They have a few different levers they can pull. One is their voting power, of course.
Okay.
They're a major shareholder in so many companies, so they have a big say in things like board elections and shareholder proposals. And they can also just engage directly with company management, like sit down with them and voice their concerns and urge them to adopt more sustainable practices.
I mean, I guess when you're BlackRock, people tend to listen.
That's definitely part of it. But we also have to consider the potential downsides of all this power.
Oh, yeah, there's got to be some downsides, right?
Oh, absolutely. Some people are worried that this concentration of power in the hands of a few big asset managers like BlackRock could actually stifle competition and innovation.
Mm.
Like if a few firms control so much of the capital, they basically get to decide which companies succeed and which ones fail.
Yeah, even if those companies have good ideas or products, they might not get the funding they need.
Exactly. And then there's the concern that these firms could start using their power to push their own agendas,
Okay.
which might not always be in the best interest of individual investors or even the economy as a whole.
So it's like there's potential for good, but there's also a need for, like, some checks and balances.
Absolutely. It's a complex issue, and it's something we need to be really mindful of as we move forward.
Yeah, this is getting me thinking. It seems like Fink and BlackRock are a lot more than just a financial company.
Yeah.
Like, they're almost like this force that's shaping the way companies operate and even the whole economic landscape.
It's pretty amazing when you think about it. And we've only just scratched the surface. There's so much more to unpack about their strategies, their impact, and what all this means for the future.
I'm definitely hooked. This is fascinating.
Great. Let's take a quick break, and then we'll dive even deeper into this world of Larry Fink and BlackRock.
Before the break, we were talking about some of the downsides of, like, BlackRock being so big and influential.
Right, yeah.
Like, what are some of the specific concerns people have?
Well, one of the big ones has to do with their ETF business.
Okay, yeah.
They manage like trillions of dollars in these ETFs, and they've gotten super popular with investors.
Yeah, we were talking about those earlier. It's basically like a basket of stocks, right?
Yeah.
They track like a market index or a specific sector.
Exactly. And here's a crazy stat. Over 80% of all the assets invested in the past decade have gone to just 3 companies.
Wow.
The big 3 that dominate the ETF market.
Okay.
And BlackRock is by far the biggest. Like, they have something like a 35% market share.
That's huge. I mean, why are they so popular? What's the appeal of these ETFs?
Well, a few things. They offer diversification, which is always good.
Uh-huh.
They're super convenient.
Okay.
And the costs are really low.
Yeah, that makes sense.
Like, for example, their S&P 500 ETF, you're only paying 30 cents a year for every $1,000 you invest.
Like, that's nothing.
It's practically free, and the competition among ETF providers is so fierce that those fees have just gotten squeezed down even further.
Wow. But doesn't all that competition put pressure on BlackRock to, like, find new ways to stand out?
You bet it does.
Like, how do they attract new investors?
Well, that's where their focus on ESG investing comes in.
Okay, yeah.
They're trying to attract investors who, not only care about making money, but also want to invest in companies that are doing good things.
So it's like profits with a purpose.
Yeah, exactly. BlackRock's betting that by incorporating these ESG principles into their strategies, they can attract this whole new generation of investors
Makes sense.
who are really concerned about climate change, social justice, all that stuff.
Okay, but can ESG investing actually make a difference?
Well, that's a big debate right now. Some critics say it's all just a marketing gimmick.
Hmm.
It's hard to measure the real impact, and it could even lead to higher costs for consumers.
How so?
Well, think about it. If companies have to meet all these stricter environmental and social standards, it's going to cost them more money right now.
Yeah, true.
And who do you think ends up paying for that?
Yeah, probably us, the consumers.
Exactly. And then there's the risk of greenwashing,
Yeah?
where companies make these superficial changes just to look good.
Right, they're not really committed to it.
Exactly. So, yeah, investors need to be careful, do their research, make sure the companies are actually walking the walk.
So how do you tell the difference?
Well, that's the million-dollar question. But despite all these challenges, there's actually growing evidence that suggests ESG investing can lead to better returns in the long run.
Oh, really? I thought it was the opposite, that it was all about sacrificing returns for, doing good.
It's a common misconception. But think about it. Companies that prioritize sustainability, they tend to be better managed overall.
Oh.
They're more innovative.
Mm.
And they're less likely to get hit with reputational damage or regulatory scrutiny.
That makes sense.
And all those things can contribute to stronger financial performance over time.
So it's not an either-or situation. You can do good and make money.
That's what BlackRock's betting on, at least. They believe that companies that embrace sustainability, they're the ones that are going to win in the long run.
It's an interesting idea. It seems like the whole investing landscape is changing. Like, investors are demanding more from the companies they invest in.
It's a real shift. And BlackRock, with all their influence, they're at the forefront of it. What they do, what they say, it has a huge impact on the corporate world.
It's pretty wild to think about one company having that much power. But I'm still struggling with this idea of BlackRock, this giant financial institution trying to be a force for good in the world. It seems a little, I don't know.
What, like a contradiction?
Yeah, kind of. It's like a whale trying to do ballet.
That's a great analogy. It is a unique challenge. They're trying to balance their duty to their clients, which is, making them as much money as possible,
Right.
with this desire to address these bigger societal concerns.
Yeah, tough balancing act. So how are they actually doing it? How are they navigating that tension?
Well, one way is by engaging directly with companies on ESG issues, like we talked about ExxonMobil earlier.
Yeah, what were they doing there?
Well, BlackRock's been worried about ExxonMobil's climate risks for a while now.
Okay.
So they teamed up with some other investors to push for changes to the company's board.
Oh, interesting.
They wanted directors with more expertise in renewable energy and, how to actually deal with climate change.
So they weren't just investing in ExxonMobil, they were trying to change the company from the inside out.
Exactly. And you know what? It actually worked.
Really?
ExxonMobil has now committed to ending routine gas flaring by 2030.
Wow.
And they're disclosing more about the climate risks they face.
So they are making progress.
It's a slow process, for sure. Change in a big industry like fossil fuels doesn't happen overnight.
Yeah.
But what BlackRock's doing sends a really strong signal to the whole market, like, hey, we're serious about ESG.
Okay.
And we're willing to use our power to make things happen.
It's fascinating to see how they're using that power. But I'm curious, how did Larry Fink become such a big name in finance in the first place?
Oh, his story is a good one. He actually started out as a bond trader at First Boston.
Oh, wow. So he wasn't always like Mr. Sustainability.
Not exactly. Early in his career, he was actually a pioneer in developing mortgage-backed securities.
Those sound familiar.
Yeah, they should. They played a big role in the 2008 financial crisis.
Oh, right. Those were the things that, blew up the economy.
Yeah, but back in the 80s, they were seen as this brilliant financial innovation.
So Fink helped create the very things that would later cause so much trouble.
Yeah, in a way. But it was a different world back then.
I guess.
No one could have predicted what would happen. It's a good reminder that even the smartest people can make mistakes, and that the financial system is just incredibly complex.
Yeah, starting to see that.
And, Fink actually experienced a pretty big setback early on in his career.
Oh, yeah. What happened?
In 1986, he had this massive trading loss, like $100 million.
Ouch.
Yeah, it forced him to leave First Boston. It was
Wow.
a humbling experience, but he learned from it. He realized that he needed to get a better handle on risk. And that became like a core part of his investment philosophy going forward.
Makes sense.
So he took that lesson and went on to co-found BlackRock in 1988.
Okay.
And from the very beginning, they were all about risk management.
Oh, interesting.
They even developed this really sophisticated risk management software called Aladdin.
Aladdin.
Yeah, and a lot of other financial institutions use it now too.
So they're not just managing their own risk, they're helping other companies do it too.
That's right. And that's another part of what makes them so powerful, They have this deep understanding of risk.
Okay.
And they have a really good track record of navigating these crazy markets.
Fink is definitely a complex guy.
Totally.
On the one hand, he's this brilliant financier who helped create some of the things that caused the financial crisis.
Right.
But on the other hand, he's now this advocate for sustainable capitalism.
It's an interesting paradox. And it makes him one of the most fascinating figures in finance today. It's amazing to think about how one person can have such a huge impact on the global economy. What Fink thinks, what BlackRock does, it's shaping the future of capitalism as we know it.
This deep dive has definitely given me a lot to think about.
I'm glad to hear it. And we've only just begun to explore this.
Really?
Oh, yeah, there's so much more to uncover. Like the whole history of BlackRock, how the financial industry's evolved, and this whole debate about the role of corporations in society.
I'm already thinking about all the questions I have about Fink, BlackRock, and the future of finance. It feels like we've only just scratched the surface.
That's the great thing about these deep dives. They make you curious. They challenge what you thought you knew. And they leave you wanting to learn more. We've given you a glimpse into this world of Larry Fink and BlackRock, but the rest of the journey is yours to take. But before we wrap up, there's one more piece of the puzzle we need to talk about. BlackRock's relationship with the Federal Reserve.
Ooh, now this is where it gets really juicy. Yeah, the Fed, BlackRock, trillions of dollars. It's like a recipe for some serious power dynamics.
You got that right. Their connection goes way back to the 2008 financial crisis.
Oh, okay.
When the whole system was about to melt down, the government turned to BlackRock for help.
So they were like the cleanup crew?
Kind of, yeah. They were tasked with managing the assets of Bear Stearns and AIG.
Those were two of the biggest casualties of the crisis, right?
Yeah, two of the biggest. It's pretty amazing how BlackRock went from being this relatively new company to playing such a crucial role in a global crisis.
It's pretty meteoric rise.
It is. And it shows you how good they were at managing risk and how well they understood all those crazy financial instruments. But it also raises some questions about conflicts of interest.
Yeah, right. How can a company be looking out for their clients and also working so closely with the government?
That's the million-dollar question. And critics have been pointing this out for years. The worry is that BlackRock's relationship with the Fed could give them an unfair advantage or even influence their investment decisions.
So, did this close relationship continue after 2008?
It did. When the pandemic hit, the Fed turned to them again.
Really?
Yeah, they were put in charge of managing a big chunk of the Fed's asset purchases, the ones they were doing to try to stabilize the economy.
So BlackRock was basically acting like an arm of the government, spending taxpayer money.
You could say that, and it's definitely fueled concerns about how much power they have and the lack of transparency around what they're doing.
It does seem like a lot of power in one place and
Wow.
not a lot of oversight. This whole discussion is making me think about the role these huge asset managers play in our economy and what the consequences of their power might be.
It's a huge question, and it's a conversation that's just getting started. It's something we'll definitely be keeping an eye on here at the Deep Dive. But for now, let's wrap up with some key takeaways for our listeners.
So we were talking about BlackRock being brought in to help with the 2008 crisis, and then again during the pandemic.
Yeah.
It sounds like they were basically acting as like an extension of the government,
Yeah.
managing all that money.
Yeah, and that's definitely raised some eyebrows.
I bet.
Critics say it kind of blurs the lines between, the public and private sectors.
Mm-hmm.
And it gives BlackRock this level of influence that's never really been seen before.
Yeah.
And that could be a problem.
It makes you wonder if there's like a conflict of interest there.
Right.
How can a company be like looking out for its clients, but also be basically an arm of the government?
It's a good question.
Yeah.
And it gets to the heart of this whole debate about BlackRock's power.
Okay.
Some people are worried that because they're so close to the government, it could give them an unfair advantage in the market
Uh-huh.
or even influence their investment decisions.
Could you give an example of how that might play out?
Sure. Like, imagine the Fed is thinking about changing a policy. That might affect, say, the tech industry.
Yeah.
If BlackRock knows about those discussions ahead of time because they work with the Fed,
Right.
it could give them an edge when they're deciding what to invest in.
Oh, I see.
They could buy up tech stocks before the policy change is announced, and then, boom, their value goes up.
That doesn't seem fair.
Right. It raises questions about whether everyone has a level playing field.
And if things are transparent enough.
Exactly. And there's also this concern that BlackRock is just too big to fail.
Hmm.
You know, like some of those big banks in 2008,
Yeah.
if they were to have a major setback, the government might feel like they have to bail them out.
That's a scary thought. It sounds like we need, like, better rules for these massive asset managers.
A lot of people think so.
Yeah.
Like clearer rules, stronger safeguards to make sure there are no conflicts of interest,
Huh.
and that these firms are actually acting in a way that benefits everyone.
Right, not just themselves.
Exactly.
So what does all this mean for, like, the average investor?
Yeah, why should they care about BlackRock and Larry Fink?
Right.
It's easy to feel like this is all happening, in some far-off world.
Wall Street stuff.
Yeah, but the truth is it affects all of us.
How so?
Think about it. Their investment decisions can change the prices we pay for things.
Wow. Okay.
It can affect what jobs are available,
Huh.
even the future of the planet.
So this isn't just about, like, Wall Street and corporations.
No, it's about real-world stuff.
Yeah.
It's about understanding the forces that shape the economy
Okay.
and how these giant companies like BlackRock fit into that.
This has been a really eye-opening deep dive. I've learned a lot.
Me too. It's a good reminder that even though finance can seem, like, really complicated,
Yeah, it can be.
it's something we can all understand and have a say in.
So what's the main takeaway for our listeners?
I think the biggest thing is we're in this era of massive financial power,
Huh.
and that power is getting concentrated in the hands of a few really big asset managers, like BlackRock.
Yeah. It's kind of scary, but also exciting.
It is, and that's why it's so important to stay informed, ask questions, and hold these companies accountable. I mean, the future of our economy, maybe even our society, depends on it.
That's a powerful thought.
It is.
This has been a fascinating deep dive. Thanks for explaining all this.
It's been my pleasure. And remember, knowledge is power.
That's right.
The more we understand about how finance works, the better off we'll all be.
I couldn't agree more. And to our listeners, don't forget to subscribe to The Deep Dive for more explorations into the forces shaping our world. Until next time.